Welcome to Module 2 of Managerial Accounting. In this brief lecture, I'll provide an overview of the topics and the requirements you'll need to fulfill the module. Our topics are covered in our readings in chapters 5 and 6 of our textbook. You'll once again complete your assignments in McGraw-Hill Connect, and you'll have a course project discussion post. The four things I'll cover here in this brief overview are the cost, volume, profit, variable costing and segmenting, what you need to do to complete your assignments, and a brief overview of the discussion. Let's begin with cost, volume, profit. This is an analysis that we use to determine changes in sales volume and cost and how it affects your company's profits. At its core, CVP, cost, volume, profit, analysis helps a business determine how many units they might need to sell to break even or reach a specific profit goal. You learn about this in the readings in Chapter 5. The CVP model relies on a few key components: the sales price, the amount that the company is going to sell the product for; variable cost, these are costs that change in direct proportion of the volume of goods and services being produced, maybe raw materials or direct labor; fixed cost, the costs that remain constant regardless of the volume of services or goods produced. This could be rent or salaries. And then the contribution margin. This is the amount of revenue remaining after deducting variable cost. It's the amount of money available to cover the fixed cost and contribute to the profit. Using these components, you'll learn the core formula and how to compute a break-even point. Moving on to our second topic, variable costing and segmenting. Variable costing is also known as direct costing. It's a method of inventory costing where only variable manufacturing costs, for example, direct materials or direct labor, and variable manufacturing overhead, are treated as product cost. All fixed manufacturing overhead is treated as period cost and is expensed on the income statement in the period it's incurred. Variable costing is a useful tool for management because it simplifies cost, volume, profit analysis by clearly separating variable and fixed costs. It prevents managers from artificially inflating profits by overproducing inventory, under-absorbing costs, producing more units deferred fixed manufacturing overhead into inventory, which temporarily boosts reporting profit. Variable costing avoids the issues such as costs that are expensed immediately. Segment reporting involves breaking down an organization into different business units to utilize individual performance. A segment is any part of an organization for which a manager wants to collect cost, revenue, or profit data. Segments can be product lines, divisions, or geographic regions. So this is what you're going to need to do to complete the module. Similar to the last module, a bulk of the work is going to be completed in McGraw-Hill Connect. You'll begin with your reading and SmartBook assignments, as done previously. These will be for chapters 5 and 6, followed by your concept videos. Once you've completed them, you'll move on to your homework problems. And finally, you'll have an opportunity to apply your knowledge by completing the concepts and practice exercises in our ongoing simulation, Annie's Ice Cream. We have one last thing, our discussion. In this week's discussion, using the company that you chose to work with in Module 1, you will choose a new product to bring to market. Then, analyzing the company's most recent financial statements and reasonable estimates, you'll complete a CVP analysis for your product. This discussion is important because it's a building block for your Module 5 course project, when you'll submit a full cost, volume, profit analysis for new or proposed product. By developing your CVP components now, such as selling price, variable and fixed cost, your break-even point, and target profit, you'll receive valuable feedback from your peers and myself, or your instructor. Have a working draft for your key financial calculations for your project in the upcoming modules. You'll be able to identify that what may need to be refined or further research. Your completed week 2 posts can and should be revisited and expanded when you're completing your financial portion of your Week 5 project. So be sure to explain your assumptions clearly, organize your numbers so they're easy to understand, and take any notes or feedback or insight from your peers. That's it for this module. If you have any questions, reach out to your instructor. Now's the time to get to work, and best of luck.